Okay, let's move into finance, which is my most hated. Sorry. I just, when I picked business, I was like, I didn't pick math, and there's quite a bit of math in this. But it's not too bad. You guys would have done some finance when you guys looked at gross profit, net profit, COGS, the balance sheet, income statement, cash flow, like all of that is finance. So if you didn't like it in year 11, be ready. Be ready for year 12, but we'll make it through. So one of the influences is global economic outlook, and this one is one that a lot of students struggle with, but it's actually not too bad. I think it just gets a little bit wordy. So the uncontrollable finances include availability of funds, interest rates, and global economic outlook. So uncontrollable means that it's just in the external business environment. So you can control, what loans you want to get or what, machine you want to buy. But in the outside business environment, you can't control what happens to the economy. Nobody could have guessed that the economy was going to crash and, COVID was going to happen and businesses were going to fall and fail and close down. Like, that's just an economic external thing happening that, businesses couldn't deal with. They couldn't have thought that it was going to come, and they couldn't physically do anything to stop the economy from falling. They could have responded to it and made changes wherever possible that they could have internally, but externally, like, nothing was going to get rid of COVID at that time. Like, that's just how it was, and they had to change. They couldn't change the environment externally, they couldn't change the COVID, but so they had to respond to it. So what you have to do is to place appropriate financial management strategies to minimize the negative effects. So like I said, they can't, and at the time they couldn't get rid of COVID. But what they could do is put in strategies where possible to minimize the effect that COVID had on them. So a lot of businesses had to shut down, but that's why a lot of them moved online. So that's just an appropriate financial strategy that they could use to put it into action. So globalization has created more interdependence between economies and their business, which is the financial sector, because they have to rely on trade for expansion and increased profits. So the global economic outlook itself is the projected changes to the levels of economic growth throughout the world. So it's either a positive outlook or it's a negative outlook. Now, if it's a positive outlook, it increases the world economic growth, and then that impacts financial decisions. So for a global economic positive outlook, I always think like everyone is happy, like it's sunshine, rainbows. There's increasing demand for goods and services. So a lot of people and Australian citizens, they're making money. They've got a really like high disposable income. Because they've got such a high disposable income, everybody wants to go out and spend their money. That increases the demand for goods and services because people want to spend, which means businesses need to have the products and the services available, which then means that they need to increase their production to meet demand. They need funds for that equipment, so they need to go to the bank to get that. They need the staff to do it, so they need to hire people, and they need to expand their businesses. So basically, everything's growing, everybody's in demand, like everybody's wanted. They decrease interest rates on funds borrowed internationally from the financial money market, and it decreases the level of risk associated with payments because banks want to give you money because they know, what, everybody's spending now. The business is naturally going to be successful because the economy is in a good state. And basically, everyone's happy. So, positive global economic, everybody's happy. Negative global economic outlook is when the financial decisions are affected in the opposite way. So in this example, a lot of people losing their jobs. There's very high levels of unemployment. Because people don't have jobs, they're not willing to spend money. They're trying to find cheaper products, which means that a lot of businesses are not selling enough. They've got kind of this excess of supply, but the demand isn't there, which means a lot of people are losing their jobs. Banks don't really feel too confident in giving money because they're like, oh, no one's spending, like, why are we just going to give you these loans out? So it all really depends on the state of the economy. So here we've got a case study for Qantas. So it's reported an annual loss of almost $2 billion as it deals with the coronavirus pandemic. Australia flag carriers boss says trading conditions are the worst the airlines ever had in their 100-year history. So $2 billion loss for Qantas during the COVID pandemic because they couldn't travel because of the government policies. So that's just an example, like a case study example for Qantas, how like the global economic outlook, where if the economy is in a bad state, and it was during like the coronavirus pandemic um, because of the restrictions which stopped businesses from running, which stopped people from spending, which stopped businesses from running but producing and having their services. So all of it affects the economic outlook.